In the first half of 2020, we've seen the COVID-19 pandemic spreading throughout the world, and that has reduced economic activity in most sectors of the economy. In our toll roads in Texas, we've seen very low traffic, especially in April, but have recovered since. And we're seeing patterns that are close to what we saw before the pandemic in terms of peaks in the afternoon, even some in the evening. So patterns are encouraging, but of course, now with the surge in COVID cases, we've seen a temporarily stoppage or reduction of that recovery. In the 407 ETR, the recovery also was there, but it's lower than in Texas, probably because there was more restrictions in Toronto than in other areas. But in July, we start to see some reduction on the speed of the alternative, like the 401, and that's encouraging. Also, it's important to bear in mind that all these projects have ample liquidity, and that gives us comfort with the uncertain health issues and should feed the dividends in the coming months. In terms of air travel, we've seen very reduced air travel with governments imposing restrictions, travel bans, quarantines, and that has affected our airports. And with this very low traffic, our airports have been involved in cost reduction initiatives, also avoiding non-required capex. Of course, these initiatives have one-off costs or write-offs that have affected the results. And they have also negotiated preemptive waivers. Heathrow has ample liquidity. Even with no revenues, it could face commitments for the next 12 months comfortably. And with the normal revenues that could be projected now, it could get very well into 2022. Also, we should remember that Heathrow is a regulated asset. The next regulatory period starts in January 2022, and we should have a reset of traffic projections then with the updated view of the industry. Also, regulation takes into account in the out return that there's some risk to the business. Of course, this pandemic is way beyond that. In terms of construction, we must say that the production level activity has been quite high, but we have incurred additional costs, 44 million euros related to the pandemic, additional costs and expectation of higher costs in some contracts. And of course, we have logged in some complaints or claims to try and recover this, but we have not recorded anything in the P&L. Why? Because it could take time and the outlook of the likelihood of the recovery is uncertain. In construction, I must highlight also the performance of Budimex and Weber in terms of margins, good positive margins, and the former Budimex have also shown very good cash flow performance. In services, the most affected probably was Ferrovial Services Spain in the activities related to infrastructure maintenance, because other activities have been quite resilient, like waste treatment, for instance. And Amy has shown less impact than Spain and a reasonable level of activity. In terms of cash, the first 6 months have been much better than the comparable of 2019, with much better working capital performance. And also we recorded the closing of the sale of Broad Spectrum and also a 5% stake in Budimex. In the end, we closed with a net cash position north of 1.6 billion and liquidity of 7.5 billion euros. And also this should provide a strength to really look forward with the uncertain health issues still ahead. And in terms of assets, we should remember that our main infrastructure toll road assets are in areas like Dallas-Fort Worth and Toronto, where the economy is well diversified and should restart growth once the health issues are behind us.